All right. Hey there. What's going on, everybody? Chris Franks with Texas West Capital coming at you live just a little bit after 11 a.m. Central Standard Time here on Friday, the 12th of April, 2024. Also coming at you live from just north of Houston, Texas. We've got a little bit different show today. We've got a couple of guests here, Andrew and Tillman, and they're going to discuss, the ETFs, macro stuff, things they're looking at as far as Bitcoin and just the markets in general go. If you guys are not following them, if you're on X, make sure you do. I've got their links right here below the video here, so you can follow them. And while I'm thinking about Jesus, I always forget. I'm so terrible at this. Do me a favor, hit the thumbs up, hit the like, hit the subscription button. Follow me wherever you're following, guys. Remember, I simulcast here on Facebook, YouTube, Twitch, and X ever since that day in the middle of my stream a few years back where YouTube just got rid of my channel. Took me 5 months to get it back. Some of you guys have been here a while. You might remember it. So anyway, that was good times, right? But now we simulcast everywhere, so that way you guys can catch us everywhere. Hopefully you're doing all right. We've got halving coming up, guys, in about a week. Are you ready? It's going to be a non-event. I know we talk about it a lot. But at the end of the day, really the focus today is going to be more about what's coming, what we're expecting as the year kind of moves on. And then in the latter half of the show, I'll go ahead and pull up some charts for you guys. Does it sound good? Everybody ready to do this? To do this? I can't even speak, right? So let me go ahead and bring up the guys here. We've got Andrew and Tillman here. How are you guys doing?
Doing great.
Doing fantastic. Thanks, Chris.
Yeah. So I actually got introduced to these guys because I was following Andrew for quite a while there on X, and Andrew was popping out a lot of really good information, and especially the last few months on the ETFs and stuff coming up with that. He knows a couple of guys. I think it's we all as you get to that older age as men, we all kind of know a couple of guys, right?
Yeah. We've traveled a few miles and picked up a few friends, as they say.
There you go. And in this case, they're more important people to know than maybe some of the people I know. So, so, we've got halving coming up here. First time ever hitting all-time high prior to halving. Mm-hmm. We've got ETFs. I think the ETFs has been the big change in the market overall. I think it materially changed what we're kind of looking at back there on whatever it was, January 10th or 11th when it got approved. But I don't think necessarily that it is the only driver. I know a lot of people out here are focusing on the ETFs, and they're kind of looking at them as, these are the only thing that's driving price right now. I don't know that I necessarily agree with that, but I do believe they're a big part of what we're looking at, and not just now, but going forward. Andrew, I guess you first here. You've been the one posting a lot about the ETF stuff. I know a few weeks back you were talking about Morgan Stanley and UBS, kind of fighting over who can approve the ETF platform first. What can you tell us about that?
Well, it's fairly simple. So just on a macro level, whether or not Bitcoin ETFs are driving price, that's a conversation we'll have in a few minutes. But I do think that there's a different type of price stability. There's a different type of price movement with these kind of players on the proverbial playing field now. I think there is a fairly meaningful buy wall just because BlackRock exists and is on the playing field now. Fidelity exists on the playing field now, and those types of organizations have such a deep and vast well to draw from as it relates to customers, institutional and retail, that can allocate to the Bitcoin ETFs already, right? Even though they're not ubiquitous across traditional financial wealth management types of organizations. And some of those organizations like Morgan Stanley and UBS still have them kind of siloed in their private wealth management arms inside of their organizations. The fact of the matter is that, BlackRock has not had a day in the first, 3 months essentially of trading that they've had any outflows, right? Their inflows are north of 200 million per day. And then the other point of reference that I think is really important is that, we have Grayscale continues to hemorrhage Bitcoin and outflows every day. So a big part of those outflows over the last month were some, kind of forced selling associated with court cases and bankruptcies and stuff like that with Genesis and all that there. But that's finished and that's gone. 2 days ago, there was the smallest outflows for GBTC that they've had, which is 18 million. But yesterday popped back up to 125 million. So that just continues to tell me there is going to be continued outflows and streams. And the fact that, you're looking at 4.5 to 5 billion in outflows from GBTC and, that amount of Bitcoin that's effectively being sold, and price hasn't moved. If anything, over that period of time, price has moved higher. That goes to that buy wall, thought process. The other thing is I looked at, yesterday I looked at the chart for Bitcoin when it was last at its highs, 69 and change or whatever it was, back in 21. And the fall from those highs, 20, 25% was very quick.
Yeah.
It was in a 30 to 45 day period. And that's just not the price action that we're seeing now. We're seeing even on a day like today where it's down a bit, we're still 3.5 to 6% away from the highs that we set a couple weeks ago. There's not been a material quote unquote dump that's come, with Bitcoin. The difference from 3 years ago was there could be a news event. There could be, some, Middle Eastern country could say, oh, we've banned Bitcoin, or, CZ could make a tweet, or those dynamics have materially changed. Now, that doesn't mean that there can't be price movement where there's a 20% drop. It's just that it's going to come from a different source in a different way. I come back to my initial point that there's a real buy wall here associated with these, global institutions that have super deep rosters of massive client bases that are going to be allocating to Bitcoin. So it's a material change in how the price is affected and how it moves as it relates to Bitcoin.
Yeah, I would. Go ahead, Tillman.
I just would echo that sentiment as it relates to, these market cycles. I've been in Bitcoin for a long time and have seen the drastic, radical shifts in price, both upwards and downwards, that we attribute to the crypto markets. I think that Bitcoin has graduated into a new class. It has been recognized by the financial world as a safe haven asset, as a means to protect against inflation, better use case from a easeability and fungibility and transfer perspective. So all of these things are stacking up in the favor of Bitcoin as it pertains to how it's perceived by the world. And so the ETF, to me, it's not so much that it's driving price because of the buys. I think it's driving price because it's an approval that is significant. And it's a shift in market makers, right? We had market makers like CZ, Binance, and Coinbase were the primary market makers for the last 10 years, essentially. And their depth of liquidity pales in compared to the market makers that we have now. And the sophisticated means by which they onboard people has significantly changed. Like, imagine 4 years ago, how difficult it was to get in and out of positions based upon you holding X coin, even Bitcoin. You would sometimes get locked out of Coinbase. They would shut down. There were all these things that caused people to invoke fear, right? That the market maker didn't know what they were doing. And now they have made the on-ramps and the off-ramps a legitimate, well-known mechanism, the ETF market, where people can get in and out in a moment's notice. And that provides not only the liquidity that the markets need to keep tight ranges and to have less volatility, but it also provides the comfort level in the consumer that they can manage this in a way that's not gonna come back and bite them. And when crypto prices have crashed in the past, and you're dealing with transferring your coins from cold storage to an exchange and then trying to sell on the exchange, that is a very cumbersome, non-friendly process. So I think that this ETF shift is really taking what I would consider a very narrow and deep market, where, in the past, the Bitcoin traditionalists or the Bitcoin maximalists, or even people who are just broad in their approach, they invest a very significant portion of their net worth traditionally in that. Like, if you talk to really hardcore crypto guys, some of them have 90+% of their net worth tied in crypto. Well, that's not the future, right? I don't think there'll ever be a day where the whole world has 90% of their net worth tied up in crypto, because I don't think the whole world invests, right? And so I think that we're going to this broad and shallow model where I think there will be billions of people that have between 1% and 5% of their net worth in Bitcoin, for example. So, it's an exciting time to see the shift from one market maker to the next market maker, and the level of sophistication and the level of efficiency that brings to those markets.
Well, you talked about market makers, Tillman, and something that got some attention this past week, but not enough, is there were several quote unquote market makers, and these are firms that are now authorized participants in the Bitcoin ETFs, right? When they were initially announced, authorized participants, for BlackRock's ETF were like JP Morgan and somebody else, right? Well, they sent out a 13F or something that they sent out last week, and I think it was a 13F. And they updated their authorized participants. Their authorized participants are now JP Morgan, UBS, Citigroup, Goldman Sachs, and one other of just, the biggest global banks on the planet. So, talk about market makers, right? So we started with BlackRock, and BlackRock uses Coinbase from a custodial standpoint. But all of those global firms want to get their hands on the creation and redemption of shares of the Bitcoin ETFs. That says a few things. One, Larry Fink was on a bunch of shows early last week talking about their Bitcoin ETF is the most successful launch of an ETF they've ever had in the history of their company. Even one further, it's the most successful launch of an ETF in the history of ETFs. We can't gloss over that reality. That is, you can't overstate that truth. So why do Goldman Sachs, Citigroup, and others, UBS, right? Why do those firms then come to BlackRock's door and say, "Hey, we're happy to jump on board, be an authorized participant, and handle the market making process of creating and redeeming shares," which is truly what a market maker does. It handles the movement of shares from one to another. Why do they want to do that, right? Because there's scale associated with this product. And that scale is probably only going to continue to grow because, again, it's not ubiquitous across a bunch of wealth management platforms at this point.
Well, and I think there are regions of the world that will even have an impact in the very near future. I've read a few other countries, including China, looking at Bitcoin ETFs as well. And so when you start seeing the mass adoption across sophisticated financial markets, that's as wide of an on-ramp as we could ever have hoped for. There's a lot of noise and congestion in the space amongst the people who have been here for a while as it pertains to self-custody and whether ETFs are some, lesser form of ownership in Bitcoin. And I think that that's a very foolish way to look at what adoption curves really are about. And adoption curves are about getting to scalable, customer sizes. And we haven't made it easy enough to attract that level of customer. There's a lot of people that, you can look at, even in the space, that are experts or proverbial experts, that get, hacked and lose coins. They do something foolish and send their Bitcoin to a Tether wallet, and it's tied up for 2 months at the exchange. Like, just stupid stuff that you can't have when you want a billion people to use your product. And so this is, productizing it in a way that adoption seems to be inevitable from where I'm sitting. And I think the interesting part of the mathematics behind Bitcoin is that, there's a fixed supply, right? And so when you see this dynamic demand, and you see the potential of that dynamic demand reaching the entire world, in these types of on and off ramps, you can't help but do the math and start wondering what the future is going to hold from a hard asset or hard money perspective.
Yeah, and I think that's great points what you guys are bringing up there, especially about scalability and the fact that it's just not easy at the moment. So I've been in the space since January of 2017. And the one thing I was saying back then was, listen, until we actually make it easy for people, because, one of the big things that, the Bitcoin maxis and whatnot have talked about is, hey, listen, you get to be your own bank. And my pushback on that has always been, well, people don't really want to be their own bank, just like people don't want to be their own security. So, the government says 9/11 happens. The government says, oh, we're going to come protect you now. And this is what we need from you. This is the power we need now to do this. And people are like, oh yeah, sure. Go ahead, protect me. But I think it's the same way, just people in general, they don't want to have to do the difficult stuff. They don't want to have to protect themselves. They'd rather live under the guise of security. Same thing with banks, right? People talk and complain about banks all the time, but at the end of the day, nobody really wants to be their own bank. So my position back then, and it's still today, it basically mirrors what you're saying, which is, as long as it's difficult, as long as the wallets, are what they are right now, and they've made big strides already, but as long as it continues to be difficult, it makes it hard to bring in the average Joe, the average person. And so, ETFs make it a lot easier. They make it a lot easier to scale out Bitcoin to a much greater mass, even if they're not holding it themselves, because it's just an ETF. It's easy to buy and sell. They don't have to hold in their own wallet.
And that's the perfect argument, by the way. And there is there's a real life example of that type of argument in the past, right? So gold ETFs became a thing. And at the time that gold ETFs were approved, gold was trading at about a 220, 230 type handle, right? Where's gold now? 2,300 plus, right? So, if you're a Bitcoin person, I get it on the sovereignty part of it. I get it on the, be your own bank thing, but a sizable portion of any sort of ownership of a hard asset is you want it to go up. You want it to go up in price. You want it to inflate your proverbial net worth, right? So the gold arc, as it relates to being something that you had to store in your basement versus own it as an ETF, was dramatic price increases over a period of time. And I don't see why we don't see that same sort of thing. And we sort of already have to some extent with Bitcoin.
And I do think that what you will see as the market ages and matures is less and less off ramps for self custody. I think that will be the natural evolution of the markets. It's not what is desired by many people in that market, but it's the progression of what hard assets always go to, which is control, because that control allows confidence, and confidence is the number one driver of growth. So they're going to have to get the control in a way where they feel confident. And I do think that the whole grayscale thing is a part of that, right? What is that? It's a shift of liquidity from one market maker to the other. And it doesn't look like, it looks to me, based upon the outflows, that it's not voluntary, and that there's a lot of pre-struck deals that are tied up in those numbers. That would be my presumption. Obviously, I know nothing, but it doesn't look accidental, and it doesn't look like they woke up the day of and said, "Oh, this is how much we're going to sell today." So I think there's a lot there as it pertains to. In order for this to be adopted by Larry Fink, and in order for him to stand on every stage and be shouting things like Bitcoin's going to change the world, everything will be tokenized eventually, that to me tells me that he has made it happen already, that they have a path they have scheduled, and they are on path or ahead of schedule based upon what we can tell, and that they're pressing all resources into taking control of this new emerging market. We couldn't have asked for a better outcome 4 years ago. Like I wouldn't have been, in fact, if we were taking bets 5 years ago on who would take the mantle and push Bitcoin into this new class, Larry Fink would not have been the guy that I would have picked. He would have low odds in my opinion.
He was pretty anti Bitcoin back then, wasn't he? Around 2018 or so.
He definitely looked like one of the people who were going over my dead body.
Yeah.
And so, okay, so it looks like we all kind of agree on the impact that ETFs really are having, and will continue to have on Bitcoin. So am I then to assume that neither one of y'all think the top is in for this cycle? And if you don't think the top is in, are you leaning more toward a left translated cycle, which we get a top earlier, say Q3, Q4? Or are you looking more like a super cycle, maybe a double pump, kind of like 2012, 2013? What are you guys thinking here?
So I'm not I'll make this quick because I'm not a chartist guy. You and Tillman can go deeper into that. I'll just say this. There's very rarely been a poor time to buy Bitcoin over the last 6, 7, 8 years. It goes higher, it pulls back, it goes higher again. I hearken back to late 2017 and think about the mania and what existed back then. Think about the personalities that existed back then, and how it was insane to be at 17K and change. And that's just a blip on the radar and almost funny now. So that's my contextual way to look at it, is that, the more Bitcoin you have, probably the better. So, Q3, Q4, or top or not top, I'll let you big brains figure that out.
I disagree somewhat. I look at Bitcoin as any other asset. It's about when you get on the curve and when you get off the curve. If you are putting 100% of your savings into Bitcoin right now, you need to know that you are taking extraordinary risk, because there's an old saying in the markets can stay irrational longer than you can stay solvent. So if you're putting yourself in a position where cash flow is going to determine how long you can hold that, you're in my opinion risking too much. And so I look at the curve of distribution, and I say to myself, okay, number one, the health of the market is determined in my mind based upon the range of volatility and it continuing to get tighter and tighter over time. Do we see that? Yes, we do see that. So if the market's getting tighter and tighter over time, then the volatility of this upswing should be less than the volatility of last upswing. But the volatility of the downside should be less than the volatility of the downside. And so it's not what everybody wants to hear, because everybody's looking at the past pumps and going, well, we're in for a 10x, we're in for a 20x, we're look at these past cycles and this is what we've done. I think we traded up in market makers, and because of that, we're going to have a more stable rise. That would be my predictions. And it's going to get tighter and tighter, but it's going to be, I think, one of the things that you have to weigh. If I'm right, then you've missed the boat on the big drawdowns, right? So to Andrew's point is like, if this curve is flattening and you're going to start seeing a more modest appreciation over time, it would tell me, number one, that you're not going to see a 40% drawdown anytime soon. But you might also not see the 40% pump anytime soon, that you're going to see a steady increase. Now, there is one ace that could change the entire table, which is what the miners do. There's such heavy mining concentration risk in Bitcoin right now, not only on the manufacturing of the equipment, 95% of the equipment's produced by, 3 companies in China. But when new hash rate comes online, who's putting it online and what concentration do they have of that new hash rate? Well, the S19 miners, which are profitable today, will become unprofitable after the halving. And that, if you have the cash to ride out that depreciation of production and you don't care and you're betting on the appreciation of Bitcoin price, then you're going to see them hoarding the coins and not needing to sell. And they're going to, by the law of economics, they're going to start reducing the supply of the market, because they hold all new minted coins. So if they are in cahoots with one another, in collusion, and they hold all of that inventory, then it's going to reduce the supply. And if the demand continues to increase, they're going to get their wish if history repeats itself, which is the price of Bitcoin overcomes the halving. It overcomes you getting a 50% haircut in compensation for block rewards. So that piece of it is the ace that no one knows how it's going to get played at the table, and time will tell. If you see them selling into the market, then it will have the opposite, effect. You'll see that gradual curve, or there'll be more supply for that demand on the ETF side and for all the other demand that's there. So, I look at that as kind of an unknown, and that's where a lot of the risk lies, because if you look at the other cycles, you saw massive fee increases after halving. You saw the miners in some cases capitulating, and, especially in the early days where they couldn't afford, they were mom and pops. And if it wasn't making more than the electric costs, they were unplugging the machines. So you had this hash rate drop and this new consolidation of power. We're way beyond those days. Like, mining is 100 million minimum entry point in my mind. Like, it's massive businesses taking big bets on their ability to acquire hash rate at an optimal time in the curve before the halving cuts them in half, essentially. So time will tell on that front, but it shouldn't be understated the power that they control, especially if they're wielding it in unison.
Well, and just so the audience understands, from what I understand from Andrew, Tillman actually used to run a crap ton of miners back in 2016. So this is a gentleman who actually has been in that side of the business, and she's not just talking out of his rear end here, guys. So
I love mining. I got into it. Wasn't just about, I helped a lot of people set up miners over the years. And to me, it's the best educational tool that you could ever do for yourself in terms of understanding Bitcoin, because it teaches you why you're being paid. And so when you understand why you're being paid, you understand what you're doing in order to receive that payment. And what you're doing is not only increasing the security of the Bitcoin network, but you're increasing the efficiency as well. So there's all sorts of things that can be gleaned from getting into that. I'm a nerd. I like steep learning curves, so it's fun to kind of experiment with those things. But yes, there is an undercarriage of the mining space. So if you're thinking about getting into or investing in mining stocks or all those things, I am not a financial advisor, but I will tell you some things that you probably haven't heard before, which are the mining equipment that's being produced to secure the network and to provide the transactional throughputs are called ASIC miners. They're application-specific integrated circuits. They do nothing but guess random numbers at specific protocols. So SHA-256 is Bitcoin's protocol, and this is essentially a lottery ticket creator. It just generates numbers and starts putting the numbers in the wheel. And as soon as one of those is guessed correctly, then that miner, the transactions that it has in that block are submitted to the network for approval. And so it has a natural governance to return back to a 10-minute mean. So what you've seen is this exponential growth curve in hash rate, but all of that hash rate is coming from essentially one company, Bitmain, who is Chinese owned. They produce the ASIC Antminer, and they release models that go up traditionally 4x in power with every new release. So you can't follow Moore's law on the production of the equipment. You have to follow their distribution schedule as it pertains to it, which really messes up the economic models. But yeah, the problem is if the S19 becomes unprofitable on the 20th, which it does, there's no new model. You can't, all of those S19s that are packed full of all those containers out there mining somewhere, there's no new model for them to replace those with. They have to now order those, which will be delivered at the fourth quarter of this year or or first quarter of the following year. And that's if you're lucky in your allocation, right? So what happens is you have this curve of every 4 years, your equipment becoming obsolete, and you have to reinvesting in that equipment. So if you can't depreciate your equipment in the form of block rewards, plus pay your employees, plus pay the facility costs in that 3-year period or 4-year period, if you're really, really lucky, then you're doomed. Then that's why if you look at all the balance sheets of the mining companies, they lose money just hand over fist, because it is an extremely expensive sport to play. And at the same time, you can only get the supplies from one place, and they control it in a way to make sure that you're allocated last. And I'll give you a good example, and I think, Chris, you'll appreciate this. I'm from Texas. In my younger days, I used to bring oil and gas deals to my dad, and he'd say, "Where'd you find out about it?" And I'd say, "Oh, my friend in Tennessee." And he'd go, "It's not worth looking at." And I'd go, you haven't even looked at it? That's disrespectful. Why wouldn't you look at it first?" And he goes, "Well, it's an oil deal in Texas that made it to Tennessee. That means everybody in Texas said no to it. So I know that, if it made it that far outside of Texas, it's not worth looking at, basically." And so I would say that, a lot of people look at mining against these models of projected hash rate and projected block rewards, but they're missing the biggest component, which is, when do you get your equipment online and how much did you pay for that equipment? And if you can't pin those things down, you are gambling on the model. You have no way to accurately stay in the projected model that you have built.
Yeah, it's great information, man. Yeah, I don't think most of us here aren't actually miners. We haven't actually mined. And so, I mean, that's a good way to look, especially because, when we come talking about stocks, Bitcoin related stocks, you talk about miners. And I know miners have been the big talk here the last probably 3 or 4 weeks, really. And I think that's a great little bit of education there to kind of give people that are maybe investing on those fundamentals in, Clean Spark or Riot or Mara or Hut or whatever else. Maybe gives them a little bit extra something to think about when they do it. Now, me personally, I trade charts, so I don't really listen to a lot of the fundamental stuff. But I know a lot of people that follow me do, a lot of people out there. So I love that information there. What were you going to say there, Andrew?
I was going to say all of that cool nerdy stuff that Tillman just walked through. The best point that I've ever heard him make about mining and Bitcoin is that there's only one place that actual new Bitcoins come from, and that's miners.
Yeah.
Everything else that exists right now in the system is just being moved from one hand to another, right? It's not new supply. And so, I don't know if he wants to talk about that a little bit further.
Well, there's just no cost of ownership for anyone who purchases Bitcoin, whereas there is a cost to produce that they are completely hidden from. They have never understood it, don't understand it. And so, the thing that I think we all love about Bitcoin is that it was fairly and equitably distributed. There's 3 groups of people on the earth that have Bitcoin in their wallet: people who mined it, people who bought it, or people who stole it. Those are the only 3 that exist. And that is a level of trust that you can't speak to in any other fiat or any other crypto project. Like, you can't show me another project that didn't allocate coins at the mint point, at the time of conception, to the favored group of people that were the foundation, the blah, whatever you want to call it. It's security if you judge it on the back of the Howey test. So it's a centralized force. And so, I think, going forward, it's going to be, again, this change of class. And I think it's going to get more and more sophisticated. And if I had to project my most sci-fi kind of future, I think that miners will be eventually put in every refrigerator, every TV will have a miner in it. Why? Because you at some point don't have to chase hash rate, because the epochs, like, let me put this in perspective mathematically. We're through 4 of 33 epochs, but we're through 90% of inflation. So the model is different than anything we've ever seen before. But if Bitcoin doesn't appreciate to the million, the 10 million, there will be a time at some epoch where it will not be profitable to be a miner through the whole epoch. And so at that point, you're going to see a shift from chasing the production curve to securing the network and subsidizing it with distributed ledger technology, right? So if I'm Michael Saylor and I have this much Bitcoin and it's gone up to $1 million a coin, how vested am I in making sure that the network's secure? I'm extremely vested, And so what do I do to secure the network? I find a way to hide mining hash rate capacity in every piece of electrical equipment that I could get a consumer to plug into their wall. Because if you do that, you have every household providing the security to the network without anyone with their hand out going, pay me to do that. That's the holy grail of the transition of miners in the Bitcoin space. We may be 5 epochs away from that. We may be 1 epoch away from that. We don't know. My premise would be, though, when I first started mining, block rewards were 25 Bitcoin per 10 minutes. 3 doesn't sound very good to me.
It's definitely a lot different, isn't it?
It's a low. You've got cut intent by 90%. You have 90% less incentive to be a miner these days than two epochs ago. So what does that mean? Well, it means that if we believe in the network, we need to figure out a way to have nodes and have mining capacity hidden throughout the entire world, so that there's never a chance of the network going down. There's never a chance of a brute force 51% attack. There's never concentration risk from a manufacturing perspective of the equipment that can, quote, outstrip that capacity. And you've got, honestly, the most secure financial network that would ever be created. You can't say that right now about the network, in my opinion. So 2 cents.
Okay, great. Yeah, no, man, I actually love that, man. I did not know we were going to go down that. And I love it, man. A lot of information. I guess I got one final question, guys. So when we're looking now, with where we are, with where Bitcoin's been, I guess where it is, where it's going, we've got ETFs coming in. GBTC potentially finally slowing down those outflows now that Genesis has unloaded like 3 billion. And by the way, folks, you're talking about $3-4 billion unloaded. And I think Andrew said this earlier, and price really hasn't gone anywhere. As long as we're remaining above that 59,000 level, that's the last higher low on the rally up off the bear market low in November of 2022. As long as we're above that, guys, it's not even a pullback. It's just sideways. It's chop. Yeah. And I know it's a big bit of sideways, 74 to 59, but it's nonetheless, it is what it is. Oh man, I just forgot what my question was.
Price predictions, probably.
No, I won't do that to y'all. I think it was said earlier, and it was a great point, which is that, nobody knows what's going to happen.
No.
Especially, I get up here and I say, here are my thoughts based on this, and that. But there's always invalidation levels, guys. There's always secondary thoughts if it doesn't work out. I guess
here's something that I do know. Here's something that I do know. UBS, Goldman Sachs, JP Morgan, BlackRock, Citigroup, they don't get into a business to lose money. Okay. And they don't get into a business thinking that the price of an asset is going to somehow crash. And the way that they're going to make a bunch of money is on handling redemptions. That is not why those companies have, found a way to construct a way to connect themselves to BlackRock's product and other ETF products. They're not there for that. They're there for a continued move in a specific direction and a scale of assets under management being part of the conversation, right? That, going from, tens of billions to hundreds of billions, that's what they're there for. They're not there to just handle redemptions. That's a fool's game for them. They're not interested in it. So that's the thing that, from 50,000 feet or from macro, however you want to call it, that's what convinces me that, short, medium term, I don't see a significant downside risk here that's currently on the proverbial chessboard.
I would echo that sentiment as it relates to, there's a lot of positive news. There's a lot of momentum. There's a lot of adoption. If you just discount the American adoption, you have a need to adopt in a lot of emerging markets, which is going to drive adoption regardless of what happens here. And so, I look at power laws like, Fred Krueger puts together, and, those are examples of patterns not being broken over a long period of time. Doesn't mean they won't be broken, but it makes you feel good. But let me just talk Texan for a second. In the past, I would say that we were all betting on the horse because the jockey sucked. We got a hell of a jockey now. So, to me, those are added benefits. Those make me feel better. The horse is the same horse. If you want to understand the horse at a technical level, how fast he runs on dirt and mud and blah, 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 you can get that in. But you can also look at the jockey and go, wow, that jockey costs a lot of money and he's won a lot of awards. Oh, and the owner, by the way, of the horse and the jockey are BlackRock. So sounds, pretty plausible that they know what they're doing and that we've got an inside look at the track. So I'm with Andrew. I think there's so much positive going on. I would find it hard to believe that they would consider it a success if Bitcoin's in this cycle didn't go above 100 grand. I think that's even in the most traditionalist minded person, I think they're expecting that. So, we'll see.
I like it, man. I like it, man. Hey, listen, I really appreciate you guys coming on. I know we went on a little bit longer here. Hopefully it didn't mess y'all up. But I think, man, a lot of great information, ETFs, the kind of idea of what that means to Bitcoin, mining, how to understand it better, all these things. And so listen, everybody else, if you are not following them, please do. Again, I put it, if you're on X, I put their handles up there in the title. If you're here on YouTube, I've got them right under the video there. So make sure you're following them. Lots of great information here. And hopefully they'll agree to come on back sometime. We can talk a bit more. Maybe we'll talk about those Ethereum ETFs next time.
Yeah.
Something like that.
Or lack thereof. Or lack thereof.
There we go. So we got Andrew's opinion here, guys. So
fair and equitable distribution.
There you go. Well, I appreciate you guys so much for showing up. Thanks a lot. Man, I hope you guys have a great day, a great weekend. I know it's Friday, time to maybe not time to tap out yet, but getting there, right?
Yeah. Thanks for having us, Chris. A lot of fun. Yeah.
All right. Thanks, guys. Y'all take care.
All right.
You bet.
All right, guys. Listen. So man, that was fun. That was a lot of fun. A couple of great individuals there. A lot of knowledge when it comes to, again, the things we were talking about there, ETFs, mining, the things that are really, if you're not just staring at the charts, the things that are, the underlying stuff that's going on. So hopefully you guys picked up a lot there and you enjoyed it. Yes, chart time. We're going to bring up some charts here. Give me just a moment. Let me pull it up here. Oh man, TradingView is having a little issue with me. Give me just a minute here, guys. We'll try and get these back up here. All right. And let me find the chart now. Good times, right? Oh, let's see. Coin USD. All right. Let's taco about it, right? All right, let me see here. Let me pull it up there. Ooh, let's get a better kind of view on here. There we go. So yeah, we're going to pull up the DXY here in just a minute, Andrew. Right here though, this is Bitcoin, okay? So here's the thing, guys. You can see that we've got consolidation here between, again, that swing high and that swing low, right? This is that 59,000 level, depending on what chart you're at, 59.2 to 59,000. Until we break down below that, you shouldn't even be thinking it's a pullback. It's just sideways. It's just chop, okay? This chop is also consolidating, and as you can see, volume's dropping off. When you get this kind of consolidation up toward resistance, which is around the all-time high, generally speaking, you should be looking for price to break out higher, guys. I mean, that's not emotional. That's just the way things are. A lot of people are like, oh, it hasn't broken out, so it can't break out. That isn't what's going on, right? Most of the time, again, nothing is 100% in trading, but most of the time when you see this sort of thing, where you're getting all this resistance up against the all-time high and volumes drop off, the volatility is dropping off because you're getting these. I mean, at the end of the day here, guys, look at this. Let me just kind of show you a quick picture here. This is what's going on right now. I'm not saying it's ascending triangle. What I'm saying is you have consolidation up against resistance here. You're getting higher lows up toward that resistance. As volatility, the volatility is going to drop off. That volume is going to drop off because you're taking shorter strides here. But think of it like a rubber band that you're winding up and it lets go, right? And that's where you get the big pop out higher. Okay? So, I mean, generally speaking, that's what's going on. Now, can this potentially be a triangle? I know people were looking at a triangle as this right here. Kind of like, I guess kind of like this here, right? And they were pulling it off this. And so you got the breakout and the fall back down, right? I would say here are the two possible triangles if you're going to run a triangle, okay? You get A, B, C, D, E. Whoops. And then you get the breakout, okay? So this would be, in Elliott wave, we refer this as a running triangle because wave B breaks out above where wave A begins, okay? So again, that looks like this. D and E. And that means that potentially, if we can kind of pull this back here, there's our triangle, right? Now, the important thing I think from this is that if you completed this as a triangle and you broke out and we're finding support on this daily pivot, that's important. That's a very significant area to find support. So it's possible you've got a 1 and then a 2 working here, or you've got maybe, maybe you've got a 1 still in progress, some sort of leading diagonal and pulls back. But the idea is that it would be done here. So if you think this is a triangle, then breaking down below this latest swing low here at 64,500 on this chart would invalidate that idea, okay? The other possible way that you could look at this as a triangle means we would be sideways for a bit longer, okay? Like something like this. And this, we could be sideways for another, potentially even 2 months like this, right? So in this case, what you have here is this, and I'm not a big fan of this, and I'll explain why in just 1 minute here. Let me kind of get this lined up. All right. So I'm not a big fan of this because the wave B barely peaks out above this. So you got this big, huge A, B, and this very small C just barely breaks out. I'm not necessarily a big fan of it. Doesn't mean it can't happen. But in this case, you would look for it to break down, probably target this area right here, which you can see that's resistance support here, right around 64,300 on this chart. For C, D back up, probably not all the way up there, but so we can bring this down a little bit here. And then E. And if this were to happen, I think it's a good possibility that this would bleed out over like into next month. So at least, another couple of weeks. I don't necessarily think this is happening either. I don't necessarily think, for me, the triangles are secondary thoughts right now, okay? Okay? For me, I'm looking locally right now. Until it proves something different, I'm looking at the possibility that maybe we've got this going on, okay? And we're doing a leading diagonal here, quite possibly. It gets us a 1, 2, 3, 4, and 5 up here around this, just right beyond the all-time high, right? Man, tell me you guys wouldn't be like, are you kidding me? If we went just above the all-time high there and dropped back down, right? My only thought with that is that we know there's a ton of shorts right here in this area, the 74,000 area, like record number of hedge fund shorts, okay? I've shared a chart on Twitter, if you guys follow me there on X, that shows that there's been this huge increase, this continued increase in institutions longing Bitcoin and hedge funds shorting it, right? And that's the COT report from the CME, right? The CME is the largest Bitcoin futures exchange, okay? So on their exchange, on their futures, institutions are long and continue to get longer. Hedges are short and continuing to get shorter. That's significant with that record level of short interest here. If we were to pop through that, it doesn't make a lot of sense not to stop until we're getting like above 80. It's 10%, guys. It's a 10% pop on the historical largest short ever, right there, short area right there. So I don't necessarily think even this may be going out here. let's just say this. If this is a triangle here, okay, and let's say that it's the first triangle that started with wave A down here, we should be looking minimally at 84.9 basically on this chart. That's based off the height of the triangle there, okay? So if we're to get a breakout, it was to squeeze, and this is the triangle A, B, C, D, E, or you know what? It could be A, B, C, D, E, and then go, okay? But that 84,900 would be the target based on the height there. If it's the other triangle, which is a bit shorter here, the second one I've shown, then based on the height there, the target's around 83,145. So what does this mean? This means you don't have to know a whole lot about what's going on here exactly. Here's what you look at. If you get a breakout into all-time highs, look right up here around 77,000, 100, 200 there. If we keep going through it, look up here at 83,145. If we keep going through it, look at 84.9. It's a simple way to trade it. You don't have to know which one it is, but based on corrections and targets based on those corrections, which are the heights of those corrections, those would generally be at least the targets we'd look at. Those are our guidelines. Now, it does not mean price has to reach that far, and it does not mean that price cannot move further. But it gives us a starting point so we can get into a trade and get going, right? So we have some actionable, here's my stop loss, here's my entry, here's my take profit on there, okay? With 10 trillion plus in assets, how long do you think BlackRock will be satisfied with a minor ownership of Bitcoin compared to others? What do you mean a minor ownership? Because BlackRock doesn't actually own it, right? They don't actually own it. They buy and sell according to the ETF holders, right? So BlackRock, GBTC, IBIT, all these, they don't actually own the Bitcoin. If somebody says, listen, I want to buy, they have to buy in that, right? If somebody says, listen, I want to sell, they have to sell. They can't just say, oh, no. They have to do that, right? Mr. Smith says, this stands to reason that they will act to capture the asset itself that is accumulating so much interest and acceptance. Well, if they're going to actually hold Bitcoin themselves, they have to do it another way. They can't do it through the ETF because they don't own the Bitcoin in the ETF. It is owned by the shareholders of the ETF. So again, if you get new shareholders in, you have to buy. If you get shareholders out, you have to sell. BlackRock, and then they can't say, oh no, I'm not going to do that, right? So Mr. Smith said, okay, exactly. They seem to be dissatisfied with merely being agent. It's possible, sure. But at this point, with how much it would cost to gain any kind of real share, to even catch up to Michael Saylor, is just absolutely astronomical, right? In terms of how much you have to actually pay to own that same number of Bitcoin, right? And what, MicroStrategy is what, 1.4% of the supply, maybe something like that? So yeah, I think there's a lot more to think about it when it comes to that. I'm not overly worried about that. But yeah, I think it's good. I know a lot of people, I know Fibbo especially doesn't like the ETFs and whatnot, but I think as far as mainstream adoption goes, you have to have it. I think the guys here earlier did a great job explaining that. You can't get the adoption that you need to be taken seriously unless it's done in such a way. Because people just don't, you guys, you're great. You're in here, you have your own wallets, you're doing that thing, but you're such a small percentage of the overall population. Most people don't want to be their own, bank. They want to mess with all that wallet stuff, right? They just want an easy way to transact. So, but yeah, so right now, guys, unless we're breaking down below this 59,200, depending on the exchange you're on here, unless you're breaking down about that, it's not even a correction. It's just, it's a correction, but it's not like we think, 20%, whatever. It's just sideways chop is what it is. And right now, again, to me, we've got the lower highs up toward this resistance area here. We've got volume dropping off as we do. Usually that's a precursor to, a breakout, especially at the all-time high level. You usually don't get a rejection there, okay? So that's what I'm still looking for, is that move up. Those would be the quick and easy about it, guys. Without having to know anything else, those would be the 3 targets I'd watch if we get a breakout higher. Okay. Let me see here. I wanted to bring up the USD against the yen. I posted on Twitter about this, or X. I don't call it Twitter. I'm gonna call it X. But anyway, so yesterday they rallied up to 153.384. It's the first time it's broken out about 180. That has been above 153. That's broken out above it since back here in 1990. This this really looks like accumulation here, guys. This is crazy. So you get your selling climax, automatic rally, your spring down here, show of strength, last point of support. Boom, show of strength, last point of support, breaking out here. So what do I think? This is the monthly. These are monthly candles, guys. You can see the volume picking up with it as you get down here, which is what you expect. Larger candle spreads, expansion of volume. This is what you expect. Look at this outlier right here. Look at this. March, the month of March 2020. You know what that was, right? It was COVID. Look at this, though. It was this area that held. Hit it, boom, bounced up, came back, higher low. But look at the volume that came out of it. Look at how significant that was. At that point, you should have been long on a breakout higher. Better yet, if you were watching it print this kind of thing here, you should have been long on a breakout there. Because you didn't get any follow through lower. You have this huge doji here with a large lower wick, huge spike of volume here. Printed a lower, higher low, broke out. You should have been long there looking to the top of the range. But I think what we're like, I don't think we get, we could get a breakout rally higher, but my thought is that we would pull back first. We'd pull back down here, 140, 145 area maybe. And then we get the breakout and get the jump across the creek here. That's what I think we might get. Earliest. I don't think we get continued strong rally right up through here. But this right here, make no doubt, this is 30, almost 35 years of what 34 years of what appears to be accumulation. So you had the dollar up here against the yen, comes on down here. 1990 is the beginning of the lost decade for Japan. Bottoms out down here in 2011. You're back up there now. So I think there's some interest in there, right? But let me see here. So I've got that Bitcoin dominance here, guys, real quick. Look at this. We came back, tested the daily pivot as support, broke out higher in the R1 pivot. We're looking for a breakout above 55.08. And that should say that wave 3 is in progress, minimum expected target of 57.66. So we're nearing a breakout here locally, right? This whole kind of area on Bitcoin dominance. So yeah, let me see here. Silver and gold. Look at gold here, guys. Gold did the rally, it did the big boom, and now we're getting a big pullback, right? Hit 24.48.80. It's about $100 and some change below that now. This is the monthly candle, of course. But here's the thing, guys. You got this 1,300 days of reaccumulation. Of course, it's going to break out and run up a bit. Everybody acts so surprised. Everybody tries to find reasons going on, macro, why this is happening. Guys, I'm telling you why it's happening. It's happening because of this right here. You broke out of the accumulation here. Buying climax down to the selling climax. Drops on down into your spring here. Show of strength, last point of support. Show of strength, last point of support. jump across the creek, the breakout through this resistance. You had a similar thing right here. After the accumulation here, down around, 2016, 17, 19 here, which was 1,067 days, about 240 days less or something like that, right? So it went up good here and then kind of went sideways for a few months, rallied up, pulled back, retested, broke out higher, right? Wouldn't be surprised here. So I hope Peter Schiff has enjoyed his little down with Bitcoin nonsense, up with gold. Gold buyers are smart, Bitcoiners are stupid thing. Because I think there's a good chance this thing goes sideways, potentially even through the summer at least. I don't think it's necessarily done just yet. Heading up there, but we'll see. We'll see. I've got it, again, I've got my target up here around $3,053 on that. Silver doing its thing as well. Same idea. Silver trying to peak out basically above this reaccumulation area here since, was this August of 20? So again, it's done this here. Hasn't quite broken out yet. The swing high here, the breakout is $30.35. We've hit $29.90 so far. Breakout above that. That's good though, and that gets us a run up toward that all-time high up there. But for now, it's just getting ready to break out here. So we could see a little bit of push and then a pullback, and then like Bitcoin, like I was talking about Bitcoin, then you get the big break to jump across the creek, right? I don't know. We could get it here over the next month or two. We might see silver maybe go up and gold kind of pull back. Silver kind of watching that there, right? Kind of finally doing a little something, silver against gold. So yeah, again, still overall looking for the big break out there. And then if we can get that, ultimately should be all-time high and higher, I think. That's my thoughts on this. Nothing's changed. DXY, guys, let's kind of pull it back here. So I've had two counts I've been looking at, if you guys have been following. Look at the idea that one and then an A, B, and then potentially a C here. If we break out higher above this, though, this 107.05, I think to me it's going to say this is the other count where this is 4 here. Well, it's A, B, C, D, E. So 4 is a triangle, 5 is a thrust down, and this would be an A, a B, and we'll get a C up here, and we'd probably be looking closer up here to the 110 mark before we get the drop back down. If we don't break out above wave 2 here, but we break down below 102.3 here, that's going to say, okay, this is probably correct the way it is here. This is 1, this is 2. We'll be on 3 heading lower. And remember, at that point, we're looking for 5 waves down toward 70. Okay? So nothing's changed on all that. We're just, guys, we've just been sideways here since January of 23. Over a year, right? Just sideways here. Let me see here. I have to go in a minute. What else can I get you guys? What else can I show you guys here real quick? We've got Sol still. The one we've been following since, I said you should buy it at $9. We're getting a pullback here. Again, we're just kind of dipping right below the swing low here on the weekly. We would look initially for this to hold right here at the R1 pivot. Basically this $150 area, if it gets down that low. Going up from here, I mean, this is just 3 waves up. Let me see, is that 1618? Yeah. So if I'm looking at this, I'm saying, okay, this is probably 1, 2, This could be 1, 2, 3, 4, 5, give us 3 and then 4 and then 5. Or it could be 3 and 4. If it's the fourth wave here. Yeah, that 50% will get you. We're almost at the 38.2 on that. 50%. So let it get it right around that 150 area. So if we get down there, which looks like it might, I think we look for a rally up off that. And then we're looking up here at least at 261, which is all-time high. But overall, guys, this year, I think we easily break through 410. Okay? Imagine having gotten in over here around $9 or even $10 and still being in now. Oh, it'd be such a great one, right? So 3-day bear div. Yeah, you got a slightly lower low here between the swing high and the swing high. But it's already pulled back significantly here, so you know, I don't know that it. I think if it goes below 150, I think you look down here maybe toward 135. This could end up being even a 1-2, 1-2, which again would get us to all-time high and higher. That 50% is still the 150 area. 61.8 is the 136 or so. So yeah, if we drop through 150, we'll look at 136, and in that case, I think maybe 1-2, 1-2, which just means looking up here toward that 410 area to get up there, right? But yeah, you say you're not a fan with how the alts are struggling with the daily pivot, but we're almost halfway through the month already. So that daily pivot, you know, will reset in another couple of weeks. So yeah. Peter K says, bought Sol at $10, best trade I've had next to Bitcoin. Love hearing that, man. Man, you probably see if you go to whatever her name is, Wendy O or whatever, on December 30th of 2022. That was the show I was on. Look at the comments under it. They were so bad. Or the comments during the show. I got so much hate. Who's laughing now? Anyway, just kidding. But seriously, a lot of hate with that. So nonsense. And the only other two I've got here that I want to look at real quick are Link. Because it's another one I told you guys to buy on that dip there below. Remember, I was talking about this being accumulation. We're coming down. I said it'll probably dip below. Looking to buy there between, $4 and $5, 5 and change. So had you bought it there, obviously you rallied up here, $22. And, everybody's freaking out. But, guys, that's all we've done. Why are you freaking out? Because you're watching the 15-minute time frame. This is the weekly, guys. That's all we did. Okay? If we continue on down here, I think the worst case scenario is we come to the pivot. I think if we're not turning around here around 16, maybe we come down to 12 and change here at that pivot. But I would look for that pivot to hold support there. And then to rally up and through. And especially if we go from here, I think we do at least the R4, which is $40, probably through the R5 up here at $48, $50. Especially if we rally in this area here. If we come down the pivot, there's still a chance we do that before the end of the year. Okay? And then BNB, guys. BNB. Again, we were talking about it's a buy here, just below 200. We're talking about it's a buy down here. Talked about it's a buy again here. I posted on Twitter, wouldn't it be a shame if we broke out here? It was another buy. The latest buy, you could have got in there at 250 or whatever. Be up at 610 already. Stop worrying about your emotions, guys. Stop worrying about, oh, this new stuff has to happen. It has to mean this or that. Or, oh, I think that coin is such trash. It's not going anywhere. Stop with the nonsense. Now, I don't like BSV or BCH. I don't trade them. I know they're going to go up and down, and they're going to go up. I know this, but I choose not to trade them. But I don't say, oh, I don't like them and they're trash, so they're not going to go up. Okay, that's the difference. Stop being your worst own enemy. Okay, guys? This is the reality. It's not Wall Street. It's not crypto whales. It's none of that that's hurting you. You are your own worst enemy, your emotions. Your inability to understand them, your inability to understand when they're happening, and your lack of understanding of what it means in terms of trading. You will forever be your own worst enemy, though, guys, okay? These are just some trades. Every one of these, Link, Sol, and BNB, especially Sol and BNB, got shit on so bad with their lows as they got toward their lows, and all the reasons why they had to die off. But they didn't, right? And this is why I continue to talk about them, because you guys need to be reminded of this until it becomes second nature to go, wait a minute, I'm being emotional. I need to stop that because that's going to lose me money. BNB is going to go out and make a new all-time high. I talked about that back at 180 and change. Okay? This looks like a large accumulation range here. This whole thing, not just this local thing right here, is accumulation. This whole thing is reaccumulation. So I expect to pop out higher there. All right? So anyway, guys, that's going to do it. I am over a bit. Join us. We'd love to have you there. I've got the links underneath if you want to join the group coaching or the C3 subscriptions. The discount, I've had it for a while, 29% off for leap year, guys. It's listed below as well. Use the code leap year, one word, and get 29% off any of those. If you do the monthly C3, it's only off the first month. But we do have an annual C3. We've got a 3-month, a 6-month, and a 12-month group coaching as well. If you want to understand this, so you're not the sucker selling this or buying this, so you're the guy or gal that understands how and why markets move like they do, how to approach trading, not just how to use the tools. That's easy. Any monkey can learn how to use them. But how do you approach trading? How do you actually approach this thing we do? It takes a lot more than just simply knowing how to use the tools. Well, we go on all that, okay? There is no better, more comprehensive program out there to learn how to trade, guys. I'm telling you right now. But I can't do it for you. And anybody that says, come on in and you'll learn how to trade in 5 minutes and you'll be this successful, you're going to buy it because that's what you want to hear. And then you're going to be upset because it doesn't work that way. I'm not going to lie to you. It takes dedication, it takes discipline, consistency, focus, it takes patience. But if you can do that, this is a skill that you can have for the rest of your life. And it's an amazing skill. And you can make a stupid amount of wealth with it. But it's not going to happen for you. You have to make it happen by doing the things you've got to do as traders and investors, okay? So anyway, the discount's going to be gone this weekend. So make sure you get in before it. If you come in afterward, I'm going to say, listen, we've been up. I've had the discount for a month now. I told you it was gone this weekend. I can't extend it. All right? I am also, guys, I'm going to be putting out a trading psychology, market psychology masterclass. It'll be free to attend. So if you're on Twitter, X or whatever, jump over to TX West Capital. Follow me on there. Find that post, like it, comment on it, share it, whatever. I'm trying to figure out how many people are really interested in that. We've got about 300 people right now, 300 plus people right now, because I got to figure out what size room thing I have to get together for it. But I'll probably be doing that here in the next week or so, I believe. Okay? So there it is. Man, oh man. It's been a day. It's just starting. I hope you guys have an amazing weekend. Y'all trade safe. Remember, The only thing you control is how much you lose. So please keep working on that risk management, okay? All this time I've been doing this, I still every day work on it myself. So just in case you didn't think it was all that important, hopefully you know better now. I hope you guys do well. Maybe I hope I see you guys over in TWC, the Trading Academy, guys. We got an amazing group of people there. You can make some lifelong friends, find lots of opportunities to trade, all that kind of stuff. You got questions? Send them to me, okay? All right, y'all take care. Thank you so much for showing up. I'll see you guys next week.